Okay, good evening. Today is March 17th, 2020. This is Olawale Okegbola, Sparkers Trading Corporation. I am doing this video especially for you, Uncle Tony. It's currently 6:45 p.m. I just want to illustrate the point or bring some visualization to the point I was making to you yesterday as we was talking about the market. Um, you talked about how fast the market dropped off, and it makes one scared to buy. And I was saying that's exactly what the more intelligent investor wants, because that leaves more opportunity for them. And then I also talked about, remember the financial crisis um, some years ago, and now hindsight being 2020, everybody was like, "Wow, I should have just, man up and just bought as the market was heading down." Even though it was a little hard because there was a lot more uncertainty, unlike this market where this is all news related. It's not really financial or economical fundamentals related like the financial crash. This is all news related, rightfully so, because of the virus scare we got going on right now. But I just wanted to make the point that I don't trade stocks. I'm not an investor. I'm a day trader. I do much better making my money on intraday trades. But if I was an investor, someone who will buy and hold and just wait when I'm not buying on margin, I just want to just show you what's going on. So let's get to this chart. Enough of me talking. Uh, this is today's. This is a daily bar chart. This is today's range or today's trading action. Yesterday, when you and I were talking, the market made a new low at 2350. This is the S&P 500. This gives you a broader. It's more of a broader feel of the market as a whole. I shouldn't have to talk to you about the S&P 500. You know what it's all about compared to the Nasdaq or the Dow. So, nevertheless, the market made a low yesterday. A new low. Just a low from the highs back in. This was February 19th of 20 this year. The high was at 33.93, and a matter of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. 19 days, 5 days in a week. So let's say in 3 weeks, the market has dropped from, let me get my calculator. Here, I'll do it with you here. Hold on. 3 weeks, the market dropped from 33.93.75 all the way down to making a low of 2350. That's basically 1,000 points. Thousand, I'm just going to round up 1,050 points from high to low. Normally, that wouldn't be a big deal if the market was doing something like this. This chart goes all the way back. What's this, 2019? This chart, this daily chart, goes all the way back to March of 2019. Normal market behavior, you can see the daily range, nothing compared to this because of now the fear. But when the market decides it wants to make an up move, it makes a low, goes up, goes down, balance. But do you see all the backing and filling? When the market goes up like this on an incline like this, a steep incline, you see the market breaks the incline, balance, comes back to revisit this area where there is light volume to fill in the space. Same here. Even though it took several days for the market to trade higher, it was basically when the market was on its way up, it was on thin volume, and all it took was the right catalyst, the catalyst now being Corona, to come back and get all of this very light volume, very weak structure, as we would say from day traders, right? From a day trading perspective, there's a lot of weak structure going up. The only difference is look at the drop. There wasn't any backing and filling like you normally would see within the market. And we know what's going on. It's not like there's some uncertainty because of economics, people getting laid off like the financial crisis. This is something that we know what's the problem. We know it's a matter of weathering the storm. The government, the Fed, every government agency is fully on board with supporting the economy and helping people get back on their feet because they know it's just a matter of time. 30, 60 days, 90 days, I don't know, maybe 3, 4 months before they really get everything under control. Once everything gets under control, where is this market going to go? Look at the steepness. Let's take it from the high. Look how steep this decline is. In 3 weeks, this is what the market's done. This is the damage in 3 weeks. Now I'm going to drive home the point I'm trying to make. That if you want to be a buyer, now is the time to buy. You don't have to go all in. Let's say, for example, if you want to allocate $10,000, you'd buy in quarters. So, for example, if you followed my advice from yesterday, whatever stock you want, it doesn't matter. Just follow the market. This is the broader market, the S&P 500. You buy whatever you're going to buy. So, say if you allocated $10,000, you load up on $2,500 worth of stocks. If the market, with no fear, if the market makes a new low, once it makes a new low and you hear about the new low, you grab another 2,500 worth. You basically average down. So let's just use this as an example. Say you thought the market was overdone and you're going to start buying. You would have bought, say somewhere here, 2,500. Okay, you were wrong. It's not over. The market go make a new low. No problem. What do? You buy another 2,500. The next day the market trade up. You average down, more than likely you're probably break even on this day, if not making a little more money. You're feeling good. Okay, maybe I caught the market at the bottom, but it doesn't matter. The market broke again, made a new low. So let's just say you bought another 2,500, so you're at 7,500 bucks. You're still averaging down. So that brings this average down. So you're averaging down as the market goes. And the only reason why you're doing that because you recognize the market is very steep on the decline. So let's drive home the point. And I hope I'm making sense. This chart goes all the way back. This is a monthly. This is a monthly chart. This chart goes all the way back to 2010, October, April 2010. The last time the market made a low that compared to yesterday's low was back in December of 2018. So we are, you got 19 and you got 20. So definitely safe to say over a year and 3 months. That's the last time the market made a low. But let's just use this December of 18 as an example. The market made a low. People like Buffett, the more intelligent investor who understands, they've seen this picture over and over. When people were selling and panicking, they were probably buying in this range. When all the selling dried up, guess where the market had to go? Up. Regardless if it took its time over the course of 2019, but even if they got in, not even catching the low, even if they got in somewhere here and they held on for a year, so let's just say they caught it not the low of December, but they caught it somewhere around the open of January of 19, right? Let's just say the open was at 2468 and they held on whatever stocks for a year. Basically in a year's time from 2468 all the way to 33, call it 3400, right? So 24 there. I'm just using quick and dirty math. You're talking almost 1,000 points. Basically the equivalent of the same drop we just got now of 1,000 points from the high to the low, just by holding. Nothing else to do but hold and watch the money continue to rack up. So what I'm saying is this is such a steep decline. Even if you decide to buy, and I'm not saying to go all in with 10 grand because the market could drop because the market is very news sensitive. But even if you allocate 2,500, the market drops lower than you expect, it makes a new low, you add another 2,500 as you're averaging down. When the market decides to make its move and you're not buying on margin, so you can afford to hold knowing that you're buying at the worst time. Think about the housing crisis when you were trying to get rid of your house in Cape Coral or Homestead, somewhere down south, Miami. Think about then. If you were a buyer at that time versus being a seller, you would have already made your money back and then some. Instead, you were with the herd and the masses selling when everyone else was selling. Everyone else is selling now in the market. You should be a buyer. When everyone else is trying to buy, taking this thing up, you should be a seller. So if it was me and if I was a stock guy and an investor, which I'm not, I would buy. I would hold. I'll give it a year, year and a half. I don't care because I'm catching it near the lows. Once I see the news that the market has made a new all-time high, meaning trading above here, whenever it happens, I'm now a seller because everybody gets excited when the market's making new all-time highs and they're buying at the wrong spot. So as they're looking to buy because they're following the herd, I am selling to them. No difference that when they're selling, I am buying. So the point, I just want to make it visual, give you a visual representation that now is the time. If you got money sitting around, whatever you're going to allocate, you're buying quarters and you hold. You don't have to wash the papers. You don't have to do nothing because when the market makes a new all-time high, you know that's everyone's talking about it. And then you say, oh, okay, it's time to sell. But look at the profit. Look at the profit potential. The difference here, I don't think it would take a year to make a new all-time high. Why I don't think so? As I talked about before, this is now a daily bar chart. This is very steep. If we break this trend line, folks who are trading and shorting this market, they're going to have to cover. So people who are shorting, they're going to have to be buyers. They're lifting your boat. What do you care? You're in somewhere down here. And now for those day traders, the market is coming to a 2-day balance. Balance, and it can break up. If it balance and break down, no problem because I'm long or short doesn't matter. I just need to make sure I'm positioned in the right way. But if say you bought and the market breaks lower, what do you care because you're ready? You're welcoming the market to sell off because you're only looking to add to your let's call it your crisis, your Corona crisis portfolio, because Corona is going to make you some money. Unfortunately, for those who are dying and sick, but that's just the way capitalism works. So even if you was a buyer on the breakout from here, let's just say you got in at 2,600, and I'm not saying you're buying at the S&P, whatever stock you want, doesn't matter because the market's going to lift all boats. Eventually, it's going to lift all boats. The steepness, the market's probably going to do some backing and filling. If it took only 3 weeks to get this, and this is all on panic from Corona, I don't think it's going to take a year to get back up and start hitting the highs again, especially when you know now the government is on board to do whatever it takes to keep this economy going. The Federal Reserve is on board, cutting rates to zero or close to zero. I'm sure you know that. So everybody's on board. The fraudulent Federal Reserve and the U.S. government. Everybody's, and they're postponing tax payments. Everybody's on board to get this market back up. So with that said, I'm going back to the monthly chart. With that said, I do not believe it's going to take a whole year, like it back in 2018, to get back to new highs. If you have any questions, please let me know. I hope I didn't confuse you, and I hope you find this very helpful. This is Olawale Okabola, Spartacus Trading Corporation, signing off. Have a great evening, Uncle.